Will the price go up or down next? In this video, I show you exactly step by step how to analyze price action and how to predict the price movement so that you can do this in your own trading and trade with more confidence and have a better understanding of your price action charts. When you look at this chart, what do you think will happen next? Will the price go up or will the price go down? And we're starting with a very simple example, and then we're going into more advanced price action studies in later parts of this video. So what do you think? You can pause the video and analyze it. And the first thing, whenever you pull up a chart, you should look at the overall trending scenario. How are the bearish trend waves forming? How are the bullish trend waves forming? Do you see patterns, levels? And of course, what we see first of all is that the market has been in a very strong downtrend here, and then the market recently is in an uptrend. However, clearly the downtrending phase is much stronger than the uptrending. The market fell in a short amount of time quite a lot, and then here the market moved higher but very slowly and not with the same speed. Also, we can see that there's a so-called flip zone. Previous support has turned into resistance. So overall, we can say the market is in a downtrend. The downtrending plays are more likely. Of course, there's a chance that if the market breaks above this resistance, there could be a chance of a bullish move. However, we can see that the market is finding some resistance here. We wait a little bit, and then we see the breakout. The breakout occurs after the market hit the resistance. We are seeing an increase in selling activity after the market is hitting the resistance. We have a few candles of sideways and neutral candles, and then we see the strong breakout. The breakout is clearing here the support level, and at that point I think it's very clear that there's a much higher chance of the market going down. We are in the overall downtrend. This would be an ideal trend following scenario where you have a strong impulsive wave, a weak correction phase, and then you're looking to catch the next impulsive phase. Which happened, we trade into the last low, and then you can think about even extending your target because you're going with the long-term trend. I think that was very simple, and let's move on. Now, when we look at this chart, what do you think will happen next? Will the price go up or down? The market, first of all, has been in an uptrend, very clear. The market has been moving lower from the start of this chart, and now we've put in a sideways consolidation. We can apply a few trend lines, and then we can see that there is a flag pattern building. Flags are generally considered trend continuation patterns. What you do is you wait for the market to either clear the trend line, or you can also wait for the market to clear and take out the previous high. I would recommend to not only trade the trend lines are a little bit more subjective, and therefore you can also wait for the market to take out the previous high. In this case, you can see the market trended higher. It started to take out those highs here, and then as it took out here this high, this is where the uptrend then accelerated and really strongly continued here. So again, this is a very simple, basic approach. You look for a trend, you look for the pattern, you analyze the pattern. Does the pattern show a lot of strength? In this case, it doesn't show a lot of bearish strength, obviously. That's really important. We have a lot of buying. The market really shot up higher, and then here we do have selling, but the selling is not very strong. And now just let's keep going and let's follow the price from here to a few candles later. What do you think will happen next? Will the market go up and down or down? And what we see is that yes, the market has continued. The market did try to break out, did try to make a continuation breakout here. The continuation not only failed, but how the continuation failed is very important, because we can see suddenly a lot of strong selling coming into the market. And you really want to pick up on those those short-term clues. How are individual candles performing? Do you see in an uptrend suddenly a lot of selling? This is a very, very big shift, or it can point to a very big shift, especially if it happens in the right context with this fake out or liquidity grab. So at that point, I would say it's a little bit more likely that we're going to see a bearish plays, especially now, just a few candles later, the market broke out. And how did it break out? It broke out with a lot of momentum. The last 3 candles here showed a lot of bearish strength with the liquidity grab or with the fake out here. This makes a bearish play much, much more likely. And at that point, the uptrend seems to be fading strength, and the downtrend, as it showed you here, is now unfolding. We have the retest of the previous support area as resistance, and then the market moved lower. So those are some really important lessons, because this is a pattern that you will see time and time again. Let's go on to another one. What do you think is going to happen here? The market has been moving higher. We have seen here now a breakout, but the breakout is actually not the interesting part. What is interesting is what has happened previously. When we look at the trend structure, you can see that the market did make higher highs, but the market also now broke into a new low. The market violated here the previous lowest point, and also we have a very, very strong sequence here of bearish interaction. The market did make a higher high, however, this is a very big heads up. And if you see that after a breakout, the market is falling back, especially if you see this prior, then this could show you that there's a lot of selling interest. Here, this selling sequence is already really, really important because it shows you that there's a lot of selling interest in the market, maybe also profit taking. And we have never seen this before, such a strong sequence of selling. So what do? We don't just go short because the market did break out. We want to wait a little bit longer to observe and analyze here the breakout sequence. And then now you can see the market not only fell back below the highs, but how did it fall lower? With a very, very strong bearish candle. Now you can see the selling interest is really increasing, and we are seeing a lot of selling interest here in the market. This now makes a bearish move way more likely than a bullish move, with the fake out here, with a strong selling that was already indicated here, and then with a strong reaction on the breakout attempt. And then you can see afterwards the market really fell like a stone back into a previous demand area. So looking at weakness around highs and lows is important, but also looking at how previously the market has reacted. In an uptrend, do you suddenly see strong phases of selling? Now this is something that you have really pay attention to because it can foreshadow an upcoming shift in the market, especially if you then see weakness around breakouts. Another interesting example, what do you think is going to happen here next? Will the market go up or down? First, we should map out support and resistance level. In this case, I think it's very simple. We have here the supply area that is turning that into a resistance. We have here resistance, which has become support, and we have the lowest low here as support level. One thing that we have to recognize is that the market, after bottoming out, first of all, we have a very long sideways sequence. In a downtrend, when you see suddenly the market is not able to continue the trend, but is moving sideways for a long period, those are then not anymore typical correction or consolidations. We call them more of a accumulation phase. So when a sideways phase goes on and on and on, the market typically forms an accumulation. The market here is making higher lows as well. It's really sticking here to this resistance level. This is what we would call a pressure pattern or a breakout buildup. And then on the successful breakout, the chances of a continuation are really high because of the context. You don't only look at the market clearing a high and low and then you think, okay, a breakout is good enough. You want to look at what has happened previously. What is the trending environment? Has the trending changed? Has the momentum structure changed? And those are all important things that have to go into your price analysis. And then you can see after the breakout, the market continued and started this uptrending move. So looking at how are consolidations forming, is a consolidation going on for too long? Then very often they're turning into accumulations, and those can be great starting points for new trends. Let's take a look at this one. What do you think is going to happen next? Bull, bear, up or down? And we are first starting out by looking at highs and lows. The market is clearly here in an uptrend. Then the market is breaking out here above this high here, which was previously the highest high of this trend. The market broke out with a very, very strong candle. And after a strong candle, what do you want to see? You typically expect to see more buying and more continuation after a strong candle. But instead, what did the market do? The market put in a double top here, it failed to take out the high, and then suddenly you're seeing an increase in selling. After this move here, you can see strong selling here, and you can see strong selling here. And when we look left at this trend, this is the strongest selling that we have seen. And not only the selling is important, but also the weakness around the highs is really important to observe. Is the market struggling to take out previous highs? Then this could point to a shift in the overall market sentiment. What we can do is we look for support and resistance, supply and demand zones. We have a pullback. It doesn't fully reach here, the supply zone, but you can see, if you've watched my previous videos, here in this area, this should be a volume drop, a very low volume node. The market pushes into the low volume node, finds resistance and is rejected. This reaction off of this low volume area here is something that is really important to pay attention to, especially with all of the context that we have seen here. where we are already seeing weakness in the highs, increased selling, and now you can see the strong selling is in the market. Some traders may say, oh, you're way too late now. However, the traders who jump in too early and who suffer from FOMO, typically they will be punished, and very often they will run into fake outs, and their trades don't work out as anticipated because they are not waiting for the actual clues. At this point, there's a very high chance that the market is rolling over, and here now starting as a new downtrend. We could also look left and we can see the market is now taking out even more lows. It took out this low already. Now we take out this low. Other traders may call this a change of character. This is just pretty much a violation of trend structures. When you look at Elliott wave, this is a very common signal. The market is taking out previous lows, and then you can see the market is falling off the cliff and moving lower. So you can see those are really important analyses of the price action charts. You look at the overall trending scenario, you look at weakness around highs and lows, you look at suddenly a strong shift in selling to buying or buying to selling. You want to look at, is the market taking out previous highs and lows? Are we breaking structures? Are we suddenly seeing a strong shift in the market? And those are all very important criteria when you start analyzing price action charts. And a lot of traders who struggle with price action trading, they don't pay attention to this. They often try to make their lives too simple, but you have to analyze the whole context of the charts that you're looking at. And then your price action skills and your analyses may see a huge improvements over time.